Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday. And we are now at the 29th of January, 2019, just around 4:15 p.m. Central Standard Time. Apple's earnings came out. The market liked what it saw as a whole. So while we closed down like this, you were up about 120 points and you were slightly up in the S&P off that news. The big event for Apple is, of course, that they've priced their iPhone 10 wrong. I mean, any way you want to cut it, I'm a commodity trader. When you're not getting the sales you want, you've got a problem. Chinese business fell on them, but I'm not a stockbroker. I'm just a guy that has an iPhone in my pocket, and once I paid what I did, I was pissed, and I told you so when I bought the phone. Mine had broken, and I like Apple products. All right. You can see the metals had a good bid. The dollar stayed up today in a mixed bag. In the Brits, what they did is they told Miss May pack her bags and go back to Brussels and try to renegotiate. That isn't going to work. I mean, she's going to go, but I seriously doubt she's going to get anywhere. She'll come back and who knows where you're headed. My guess is an extension. When we take a look at the weekly area chart of closes, you can see how the market each time has come up and given you corrections of sorts, and we're in that. When this pattern is broken again, and what I mean by broken, you get back over this high and close over it, it'll more resemble areas like this finally, rather than the corrective modes that we had back at these other points. And none of the corrections were quite the way that we had, and I know you know that, since we peaked out in the September-October timeframe into Christmas. When we take a look at a daily bar chart, you can see how the market's been going sideways, and this is what I call consolidation. Which way it breaks out will set the tone for the next move. For the near term, the market has a pattern of higher lows, and if we look at this high right here, 2672.50, and we step back over to the high right here, we see that that high was 2677.75. So the pattern that the market has is one of higher lows, but now with the action, lower highs. So that's very indicative of a consolidation taking place. The market has not been able to fall back to the 18-day average of closes where support is, but that's also a good thing because it keeps the pattern from turning bearish, where one might say you'd have lower highs and then lower lows into that number. So far the bulls have held on. If the market can clear the 2672.50, the potential exists for the market to rally into this area here. The upper Bollinger Band of 2706.5, the 100-day moving average of 2721, and the 200-day of 2751.5. That's a lot of resistance above the market. On breaks, I would expect the 18-day average to hold, and if it gets through that, well, you've got a possibility of the lower Bollinger Band still showing up on you. In terms of momentum, today was a bad day. You confirmed that you have lost the embedded reading. You lost it yesterday, and you confirmed today. And with this sideways action, I am looking for traders to be more aggressive on the sell side than the buy side, trying to get prices back to the 18-day average of closes. Doesn't mean it has to do that, but it's what I'd expect because of the lost momentum. In the NASDAQ, whether you exactly hit 6612, I can't tell you. You're in that ballpark. We'll have to see, obviously, what Apple's earnings do and how the market's going to respond to that. You've had a pattern of lower highs, lower lows. This run towards the 18-day average didn't quite hit it, missed it by 4 ticks. It's still very much in play. When you take a look at the Dow, Today, you started what? Losing the embedded reading. Now, it lost it by a fraction, but it lost it. If the market doesn't pick up and run, the odds would favor, just like the S&P and the NASDAQ, the price and the 18-day average try to make a run at each other. Let's assume the market likes the earnings that it just saw from not only Apple, eBay's earnings came out and others, and it goes up. You have formidable resistance, 25,017, 36, and 25,089. The upper Bollinger Band, 200-day average, and 100. So we're beginning to see that on this rally, we're getting into serious resistance points if the market can get up there. Now, the market that did not lose its embedded reading by the skin of its teeth was the Russell, but when it reopens, I would expect it's going to. The way the math goes, it would have to gap higher in order to stop that. If it loses it and it stays lost, I'm looking for the 18-day average. So in summation, would not surprise me to see that if the markets can't get a bump off of the earnings that came out this afternoon, that they want to come down a little bit tomorrow. In the VIX, you are fighting a battle at the 100-day average and the 18-day average of closes. You still have the pattern of higher lows, but now lower highs. Again, you're not trending there. In the bonds and the T-notes, what are you going to do? You're going to go into this market, into the FOMC meeting tomorrow? You might want to. You might want to go through the statement. You might want to go through the press conference. But I think the market as a whole is trying to get back to the 18-day average of closes, sit there, buy some time, and figure out what next once they hear Mr. Powell answer questions. That's my own guess. I don't know that the statement itself is going to be as revealing as the press conference. In the dollar index, I wish I could say I'm surprised. I'm not. You've now had almost 3 days in a row trading between the 100-day average and the 18. This is a market like bonds and notes that wants to see what the next move is by our Fed chair. In the eurocurrency, could you be more neutral, just sitting on the 18-day average of closes with a lower low, higher high? I don't think so. In the British pound, as I said, they gave Miss May her marching orders back to Brussels. Brussels has already said they have no intent of renegotiating a deal. I think they'd be open, and I'm just guessing, to an extension of Brexit as it is. Of course, the Brits would have to pay and so on, as they have been. But as for them renegotiating and changing the Irish backstop and all that they've got, I doubt that's going to happen. In any case, we'll see. The market's in a corrective mode. But it's in an uptrend with higher lows, higher highs, backing off from the upper Bollinger Band. Support comes in between 129.87 and 129.40, the 118-day average of closes. We keep acting, and it keeps acting more and more in the yen like the market wants to get a bounce. And this bounce has been carrying ever so slightly. Maybe it gets back to the 18-day average to figure out what it wants to do from there. You have a market that's oversold. The swing line is up. The bias is down. You've got a lot of divergence in that market. In Bitcoin, the market finished down 10. It still has the pattern of lower highs, lower lows, and it has an embedded slow stochastic reading, or does it? Let's look and learn. You need 3 days in a row. You didn't have it on Friday. You had one of the numbers over 90, certainly over 20. So Monday, both numbers are under 20 today. Tomorrow's going to be the important day. Could get some short covering. Markets typically don't like to embed. In Brent versus WTI crude, well, now we're seeing the impact of Venezuela. And the market yesterday was going, oh, the U.S. is going to keep buying Venezuelan oil. The Venezuelans are saying, not so fast. You're going to hold our money up by giving it to the opposition leader. So basically, if you want to get our oil, we want cash right now. The whole game's changing back and forth. So you're getting a flip-flop in the WTI versus Brent. You can see how the market got down 2 days in a row to what I call that line in the sand, that 18-day average of closes. You've got the swing line down, you've got the bias up, and the market in a corrective momentum mode. Same thing going on, and overbought, by the way, in WTI crude. And you can see how the market just keeps coming back here, fighting this battle at the 18-day average of closes. The Saudis have said they're going to go down another 100,000 barrels a month in February in production. Do remember, it takes their production in November is just hitting American shores now. So it's what, 8 weeks, 10 weeks of travel time from the time it leaves to it gets to our ports. So those are the things you got to think about, because you will see those numbers reduced. They're not selling their oil, by the way, to the U.S. that much anymore. They're going to go to their other markets. They say we are adequately supplied. Okay. In rebob gas, still lower highs, lower lows. I can tell you, if you're counting on U.S. driving time for this, it isn't going to be there in terms of Chicago. We're going to be freezing. I don't think anybody's driving the next few days. And in that gas, the market's starting to look into February and sees more normal weather. Even us, as bad as it is, and I'm telling you, there's emergency systems out all over the city right now, and people won't be going to work probably on Wednesday, possibly not Thursday. It could even be colder Thursday than Wednesday. Come Friday, it's supposed to get back to a more norm. In other words, not going to be in the 20 below area. And by the weekend, they're talking maybe near 30 degrees. So this is that Arctic vortex coming through, and it's a son of a gun. It's really nasty. Want to remind you, while I'm gone, you might want to take a hard look, and even while I'm gone, I'm going to be able to record my morning videos. It's, by the way, we've made this where it's just a subscription for the video. I read somebody say, well, we have an awful lot of upsell. Actually, that's not what we're doing. We have had forever a product that I can recall where I sold my videos, my written recommendations, my commentary as one package. What I've actually been doing is going the opposite way. I'm now separating it because there's price points that certain people want, and my video does so much. It gives you trade ideas. I can do it from anywhere. I even do it when I'm on vacation. I won't be in the office tomorrow. My video will be out because I can record it right off my portable computer and post it. If you haven't seen it, why not take a look at it? Now, what are we talking about? The first 30 days are $7.95, and yes, you can cancel. After that, it's $15 a month, and I'm telling you, I'm considering going to a yearly subscription in between that $15 and $8 for people that want to pay up front for a year. How do you subscribe? Really simple, because I'm not giving a free trial to this. Many of you have seen it. You call us, or you can go to our website and go in our research or education area under what area? Morning subscriber video. Sign up. We'll get you signed up, and away you go. I will see my subscribers in the morning. Actually, they'll be seeing or hearing my voice. No one's going to see me on video other than a few that we've recorded for tomorrow. I'm going to try to get in Thursday, but I'm not promising. Friday, I should be in the office. You have a good day. Bear the weather. I'm Ira Epstein.